Good afternoon, everyone, and welcome everyone to another edition of COVID-19 Special Viewpoint Series. This is a series we bring to you every day from Monday to Friday to give you insight into the world of financial world. Today we have a guest is Mr. Mani. Good afternoon, Mani.
Good afternoon.
Yeah. How are you doing, sir?
As well as under the trying circumstances that we are in. But great to be on this. Thanks for having me here.
Thank you. So how is your experience working from home? This is the new norm that's coming up in most IT industry.
I do tax work, so to some extent we are managing. So there is a certain portion of tax work that can be done equally well from home. But there are certain pieces which can't be done from home as well. And that's a bit of a challenge for people like us.
Yeah. Absolutely. Great. Yeah. Thanks, Rhea. I think for people who are working in Mumbai and Bangalore, I think it's like almost 30 hours a day you get if you're working from home. So anyway, that's another topic we can always discuss. Mr. M.S. Mani is a partner in Deloitte, India. He has over 12 years of experience as tax partner in Deloitte, India, dealing with indirect tax, GST, and customs issue since their introduction. So he has a wealth of experience for you here. He's a graduate from Xavier's College of Kolkata and also worked with PwC, EY, and VIP industries. Welcome to the COVID-19 Special Value Series. We conduct this series, Mani, as a national unity to fight the deadly virus sweeping our country. This is our way of uniting people together. And thank you, Mani, for joining us in this fight. Before we proceed, a couple of observations. We are live across multiple social media channels. Participants can type questions in the Q&A box. Some open issues will also be taken as and when time permits. Today's topic of discussion is reimagining taxation for economic recovery. So in order to set the context of a discussion, Mani sir, could you give us a 60-feet view on taxation in India, typically the multiple taxes, local, state, central, and evolution of GST?
Okay, so let me start by saying that we have two broad breakups of taxation in India. One is the direct taxes, one is the indirect taxes. When it comes to the direct taxes, we have again a business tax or corporate tax, which is levied on corporates. And then we have a personal income tax that I'm sure most of us are very familiar. When it comes to indirect taxes, we used to have a plethora of taxes in the past, but many of them have been put together. And I would say now possibly 60% of the taxes have been subsumed into one tax called GST. Now, does this mean that's the only indirect tax? Unfortunately, no. We still continue to have a few other taxes, which we will discuss in some time possibly. But broad level, the tax structure that we see in India in terms of direct tax and indirect tax is roughly the way it is in most parts of the world. So we are not doing anything exceptional where we are an outlier from the rest of the world. We are in fact following some of the advanced countries, especially the EU countries when it comes to tax reform in India.
Okay. Yeah, thank you so much. So I think that sets the context. For very long, Mani, the union budget was more about which goods have been taxed, which have become costlier, and is there a respite in some of the cost in some of the day-to-day consumptions that we have. Ever since GST has been rolled out, I guess that excitement is out of the way, and merging various levies into one tax. So has indirect tax lost its significance?
Okay, so when we talk of GST, what we have to bear in mind is GST is in the nature of a reform underway. It was brilliant that we got into GST in 2017 because we have been talking of GST since 2007. So at least in 2017, the fact that we moved to GST itself was a very spectacular achievement. Now, having said that, have we got there and have we come the full length? Possibly it will take a few more years to settle down. and for all of us to get the complete benefit of those reforms.
Okay, yeah, that's nice. Thanks. Sir, what about, can you give us to our participants a view on what's a direct tax and what's an indirect tax?
Okay, so as a broad level, when we use the term direct and indirect tax, what we are referring to is the manner in which the impact of the tax is felt by people. So in case of a direct tax, such as income tax, the person paying the tax feels the impact himself or herself. So if I am paying an income tax out of my salary, I have to absorb that tax. That's an expense for me, and there's no way I can pass it on to anyone. Now, when it comes to an indirect tax, what happens is each person in the value chain merely becomes a person who collects the tax and deposits it with the government. So the impact on the person is not felt directly. So when a business receives a tax or GST invoice, all that they're required to do is to make a payment to the vendor of the amount inclusive of the GST. The vendor deposits the GST, and then the corporate, all that it does is includes that in its cost and passes that on to the next level. So in case of an indirect tax, the impact and incidence of the tax can be passed on to someone else, and therefore it indirectly affects the person who pays the tax. In case of a direct tax, it impacts the person who is paying the tax, and that person has to absorb the tax.
Okay. So is this, the kind of taxes that we have, is this something that is, are we in line with most of the other countries, at least the advanced countries? Are we in line? Because there used to be a saying that, our taxes are very, very high and it's not good for the economy. So are we there, or are we still a long way to go?
Okay, so there are two parts to it. One is in terms of rates of tax. Are we, at par with the rest of the world? The other is in terms of the tax policy and tax procedures and the nature of taxes. How do we fall in line with the rest of the world? So broad level breakup in terms of the tax policy and tax practices, I think we have more or less taken the best practices worldwide, and we have tried to put them in an Indian context and frame the tax laws accordingly. So when it comes to tax policies, we are following the rest of the world. At this juncture, I must say that when it comes to tax policies, what most of us tax professionals look at is the EU. It is typically not US or China. So when it comes to manufacturing, when it comes to global manufacturing, good practices, etc., possibly the framework in which you compare yourself is the US and China. But when it comes to taxes, it is generally the EU countries and the UK. Now, when we look at them in terms of rates of tax, there are a few differences here and there. But broadly, again, I would say, considering our specific development requirements, we are broadly at sync with the rest of the world. Here, we have to bear in mind that over a period of time, the government has actually brought down the rates of taxes. In fact, some of us on the call would remember that maybe 30 years back, the rate of income tax used to be as high as 80%. So a person who earned an income of possibly 100 would have to pay 80 as tax and could retain 20. And that has come down today where most individuals, depending of course on the tax bracket, end up paying a tax of approximately 35%. Similarly, when it comes to the GST or the VAT related taxes, we have over a period of time moved away from having excise duty rates which were 60% and 70%. And we have now come to a normative rate of approximately 18% of GST, with only a few products such as automobiles, which continue to get taxed at 28% plus. So broadly, I would say we are in line, but the rates of tax are always a function of the development expenditure that a country requires. Since our development needs are more, since we are a developing country, possibly till some period of time, our rates of taxes would be a little bit higher than maybe some of the already developed nations.
Okay. So even our income tax are more or less in line, or we still have a long way to to be in comparison.
I would say it is broadly in sync because even in many of the developed economies, people who are at the top end of the bracket end up
Yeah.
paying approximately 40% as income tax. And that is
Oh,
broadly where things stand for us also. We
okay.
have seen a very welcome reduction sometime back in terms of the corporate income tax rate for new
Yes.
manufacturing companies. So that has been a welcome relief, and I'm sure that will make a lot of people invest. But at a broad level, that is the reason why I said there are various countries which could be, below us as
Better
well.
off. Yeah.
But possibly the comparison when it comes to whether it is VAT, GST, or whether it is income tax is to be taken together, considering what are the funding and development requirements of each country.
Okay. That's great. Uh, so we have this taxations which are, because we are a federal kind of model that we follow. So we have states and we have the central. And so what happens is that the states have to do its own social work and have to need revenue. So does the central, because they have to look after the entire country from defense and other railways and other things to be done. So state versus central taxation is like always a kind of a contentious issue. What to collect, how much to collect, what's the percentage I get, etc. So collection of taxes and government expenditure, and what are the inherent challenges emanating from devolution of powers under the constitution? Is this a good structure that we have between state and central? Is there something that we can dwell upon it for some time?
Okay, so I think first and foremost, what we need to bear in mind is that the tax structure that we have actually flows from the devolution of powers in the Constitution.
Yeah.
Because the Constitution of India lays down very clearly as to which body, the state body or the central body, is empowered to levy taxes. So there are similar to certain activities being carved out for the center, like defense and foreign affairs is carved out for the center. Certain activities are carved out for state. Education and irrigation is carved out for state. Similarly, from the tax framework also, there are certain areas which are carved out for the center and there are certain areas which are carved out for the state. Now, this broadly is a function of the federal structure that we have in the country, where the states require development expenditure and the center also requires development expenditure to fund various activities. Now, when it comes to levying an income tax, it is only the central government which has the power to levy an income tax. So whether it is corporate income tax or whether it is personal income tax, these cannot be levied by the states. The power that the states have had for a long time has been the power to levy a tax on goods. And this power has existed with the states for an exceedingly long period of time, during the initial period of that, we used to have a sales tax which was prevalent in every state. Yeah. At some point of time in 2005, the sales tax moved to a VAT structure. In 2017, we have moved further to a GST structure. So what we have at present is a situation where the central government has enacted a central goods and services tax and an integrated goods and services tax act, and each state has levied a state goods and services tax act. Yeah. The good part of this is, unlike the past, where the sales tax legislation of every state used to be completely different, with different sections, different charging provisions, different rates for different goods. Yeah. Today, the advantage that we have is that when it comes to the GST, the law is the same in all states. The rates of products are the same across all states. And this has led to manifold benefits for manufacturers, service providers, and everybody. One very small example pertaining to the previous regime and the current regime is, till we had GST in India, the price of mobile phones used to vary depending on states. So in the past, for instance, I remember in 2015, when I had to change my iPhone, I preferred buying it from Bangalore compared to buying it from Mumbai. Now that situation does not exist post 2017. The price of iPhone may now be different depending on the distributor commission. It is not different any longer depending on the GST that is levied. So this is a great achievement that we have had. It would have been good if we had consolidated everything, which, as I said earlier, seems to be work in progress. So we are some miles away from the ultimate tax reform that we can see in India.
Okay, sir, that's good. So talking, just a question on that. So state to state, when goods go from state to state, are we now saying that there are no taxes that are coming, these individual taxes one over the other on products?
Yeah, there are no tax one on one, that is referred to as a tax cascading.
Yeah.
So we don't have a tax cascading. Neither do we have a phenomena of check posts that existed in the past.
Okay.
At some point of time, a few years back, check posts across states had become a big menace for business.
Right.
And many people used to really struggle to get their goods cleared.
Yes.
After GST has come, since check posts have abolished, the transit time for movement of vehicles across state borders has significantly improved.
Okay, thanks. So I come to, I think many would be wanting to kind of hear from you on two very important aspects, that is petrol and alcohol. So before I come to that, let me invite all participants to kind of start putting up your question and answers in the box that is given to you. We will try to get across to Mr. Mani as many questions as possible. I know there will be a lot of questions coming from you because this is a topic which is of a lot of interest to all of you. So please do send as many as possible so I can get it across to him in time. Thank you. So coming back to this one aspect of GST on petrol and alcohol. This has been a kind of a topic that's been going on as to why these two are excluded, and when is it going to be included? Should it be included? Should it be not included? What's the pros and cons, etc. So could you dwell on it? Could you spend some time on why petrol and alcohol have been kept away from GST? What's the rationale? And will we see them coming into the GST fold?
Okay, so let me start by saying that while we normally tend to talk of petroleum products and alcohol in the same breath when it comes to GST, as far as the GST framework is concerned, these are entirely different.
Yeah.
Petroleum products are part of the GST framework. They are covered by the GST framework, but the GST Council, in its wisdom, has decided to keep petroleum products out of the GST framework till such time all states and the center come to a consensus on their inclusion. Whereas in case of alcohol, it is outside the ambit of the GST. So when GST had to be operationalized, we had to amend the constitution. And the Constitution Amendment Bill, which happened in August 2016, has kept alcohol outside the framework of GST. So in future, at some point of time, if we have to get alcoholic beverages within the GST framework, we will require one more constitutional amendment. Okay. And that seems to be a little far-fetched because all of us know that it's very difficult to have a constitutional amendment approved by both houses of Parliament. So alcoholic beverages coming under GST seems to be a fair distance away. When it comes to petroleum products, as I said, they are included in the framework. But because petroleum products are significant revenue generators for each state, and the state's ability to raise revenues to some extent was actually surrendered to the central government, the states wanted to keep some revenue mobilization measures with them, and therefore they were permitted to levy taxes on petroleum products. Now, depending on how the GST collections fare, depending on state finances and how well state finances shape up in future, this may not be the right time to talk of state finances or central finances because we are looking at a higher fiscal deficit right now. But depending on the way things shape up between now and the next 6 months to 1 year, at some point of time in future, in the next couple of years, I certainly see a movement to get petroleum products within the ambit of GST. That again may not happen together. It may not be all petroleum products coming into GST on day zero. It could be in phases. So the easiest product to get into GST is natural gas, because this is relevant only to 10 or 12 states, not all 29 states, and the rates are uniform across these 12 states. So that's low-hanging fruit which can be brought in. Subsequent to natural gas could be aviation turbine fuel, and petrol and diesel could be the last. So there has to be some kind of a consensus among all states and the center to have all these products brought under GST in future. But this is something which can be mandated by the GST Council. Doesn't require anyone to go back to Parliament, doesn't require a constitutional amendment, so can be done whenever states and center want to do it.
Okay, thank you so much, Mani. I think that's a lot of a lot of information and light thrown on petrol and alcohol. So while we understand from you that it's a revenue earner for the states, from an industry point of view, what is it good for? Is it to continue this way, or is it better to get into the GST from an industry point of view?
If you look at it purely from an industry point of view, getting anything into GST will always be better.
Okay.
Primarily because the moment you get your product into GST, you are entitled to the input tax credits.
Yeah.
By keeping a sector outside the purview of GST, the GST input tax credit tend to become a cost for that sector. So whether this is the oil marketing companies, whether this is various manufacturing companies which use petroleum products, today the VAT that they end up paying on that tends to become a cost because the VAT cannot be offset against the GST. It's only the GST that can be offset against the GST. So if these are brought in the GST framework, it would be very, very good for business as a whole.
Okay. Yeah. So, continuing on the GST, one of the things that, at least the channels they look forward to is one news about GST collections, and so this 1 lakh crore collection is something that, I think everybody looks forward to is have we collected or not. So is this 1 lakh crore collection of GST, is it a good figure or an optimum figure we have? Is it sustainable? And how can we kind of remain sustained in this kind of high collections?
Okay, it's very interesting because until GST came, the only time indirect tax collections used to be discussed was during the union budget.
Yes.
So subsequent to union budget, I can't remember people tracking the excise duty collections or the customs duty collections or the state VAT collections on a month-to-month basis. We would only know when the central union budget used to happen and when the states used to present their, budget. Now, subsequent to GST being introduced, the reason why we have a monthly number that comes out is because the center, in terms of the GST legislation, is required to compensate the states every month for any revenue shortfall that the states have got.
Okay.
And this is part of a grand bargain agreed between the center and the states, basis which the Constitution Amendment Bill was passed and basis which the states supported the GST legislation. Now, the central government is required to compensate the states for a period of 5 years from GST introduction, which means it goes on all the way till 2022. Now, this necessarily means that on a month-on-month basis, the central government needs to declare what it has collected, and the states also are required to declare what they have collected. That is why the focus has now moved. It has become a monthly event where a lot of people look forward to what is the collection. The figure of 1 trillion rupees that you mentioned is again very interesting because for the year, the targeted collections are approximately 14 trillion.
Okay.
Now, 14 trillion, when you divide that by 12, technically is approximately 1.2 trillion. But 1 trillion is a very good psychological mark for anyone to achieve. And therefore, at some point of time, someone said that every month we must have at least 1 trillion of collection. So it has become a topic to be discussed. During the last year, we had a revenue shortfall in GST. During the current year, we don't have any GST collection numbers yet, primarily because the GST dates to pay the tax were extended by the government.
Yes.
And therefore, the government has said a couple of days back, the revenue secretary said a couple of days back, that the revenue collections for the year will be only known by end of June because people have time till 30th June to make the GST payments. And therefore, comparing this on a month-on-month basis right now may not make too much of sense because many people may be intending to pay, they may have just deferred their tax payment dates.
True. That's correct. Yeah, I think For the month of March, it was just about some 27 crores. But really, that cannot be compared because we are in a COVID situation. So we have a problem there. So before I go to my next question, I once again request participants to send in your questions to the Q&A. If anybody would like to ask a direct question, that's also we are opening up. Do put up your hand. The back office will kind of facilitate to enable you to ask a direct question to Mr. Money. So let's come to today's date, today's day's money. Okay. So as you know, the economy as well as the markets are grappling with some of the key industries which are facing a slowdown. Typically, automobile and consumer goods. They are really having from a GST Council point of view. Can GST Council boost demand? Because that's where I think our economy, a lot of people I hear is that demand is not picking up. Can GST Council boost demand?
I would say it can to some extent, because we have to bear in mind that GST is levied on virtually every product, on every service. Now, among the products and services, again, GST is levied at 5% on the basic essentials. Yeah. It's levied at 12% on a few products and services. But by and large, the mean rate of GST that we have is at 18%. There are a few exceptions, such as automobile and cement and others, where it is levied at 28% as well. So when we look at a GST rate as a driver of demand or something which can be used to stimulate consumption, it depends on what kind of products we are talking of.
Yeah.
So products which are in the nature of essentials, the rate of GST on those is already pretty low. Yeah. If you reduce it further, that's not going to stimulate consumption. Whereas when it comes to products which are in the nature of non-essentials, yeah, or which are optionals, on optionals, possibly a GST rate reduction can lead to a fall in the price, which can stimulate demand. Here again, there are two basic determinants to this equation, which I believe many economists across the world have been struggling to figure out. Mm-hmm. What happens is, what is the proportion of price which can be impacted by a tax cut? Yeah. So if we are talking of FMCG products, for instance, yes, the GST rate on all the FMCG products is 18%. Right. So today you buy something where the price is 100 plus 18, 180. Tomorrow, let us say it comes to 12. Will that make people buy more FMCG? Will people need to buy more shampoo because it's available at 112? Will people brush their teeth more because it's 112? Possibly no. Yeah. Right? So there are certain products. Now, on the other hand, if you look at automobiles, where we have a GST of 28%, and we also have a compensation cess that is levied in addition, which takes it to roughly around 40%. Wow. Now, on automobiles, on a car which costs 5 lakhs ex-factory, the GST makes it 7 lakhs. Now, if this were to come down to 6 lakhs, would more people buy cars? In a situation where petrol prices are expected to go down, the pump prices may not go down, but at least the petroleum products are coming down. Would that make people buy? This is what a large number of economists globally have not been able to come out with a very clear answer. Mm-hmm. So one dimension is the proportion of GST which is built into the price. Yeah. The other dimension is there is a lot of empirical evidence which says that when the government of a country reduces the GST, the manufacturers and the value chain does not necessarily pass it on to the customer. Mm-hmm. Now, while they should, if they're ethical businesses and if they follow good business practices, they should. And it's not only true for India, it's true for the rest of the world as well. So when there is a decrease in the GST rates, the reduction which is expected to be passed on to the consumer is sometimes not passed on. Mm-hmm. And that makes it necessary for governments, including in India and Australia, to have provisions which are referred to as anti-profiteering. Yeah. And the purpose of the anti-profiteering legislation is, if there is a reduction in the GST rates, the benefit of that reduction has to be entirely passed on to the consumer, And if they are not, then there is a body that investigates that and decides what corrective action is to be taken. So because of these two determinants, I believe there is no clear evidence in the form of, let us say, a research paper or a finding which says that a 5% reduction in GST stimulates consumption by 2.5%. Unfortunately, we don't have that data with us.
Yeah. Okay. So we have these slabs of 5%, 18%, 28%. And the GST Council keeps tinkering goods between these three. And there has been all this, to make it everything simplified. Like recently, even the government has announced, one nation, one ration card. Can we dream of a regime where we say one nation, just one tax for all goods? Is it possible?
Okay, so when the GST was introduced, it was touted as one nation, one tax.
Okay.
That's how all the audio visuals by DAVP were circulated. It is one nation, one tax. Okay. Because as I said before, we at least now have the same rate of tax on the same product across the country.
Yeah.
Which we didn't have till 2017. So to that extent, we have one nation, one tax. What we don't have is one nation, one rate of tax across products.
Okay.
But that again in GST, whether it is in India or rest of the world, now we have many slabs. We have a 5, a 12, an 18, a 28. Yeah. At some point of time in future, I'm sure we are headed to maybe a rationalization of slab. Instead of 4, we might have 3. Okay. Instead of 3, we might have 2.5. Yeah. But can we have one rate which fixes everything? That may not necessarily be good either for the government or especially for the consumer. Yeah. Because imagine if you have the same rate of tax which are on essentials being applied on luxuries. Yeah. What we are doing essentially is depriving poor people. Yes. And therefore, even globally, most countries prefer having at least 2 rates of tax. One is a very lower rate, and that is applied on essentials and articles of consumption of the poor people. And the other is the mean rate, which is applied on everything else. Yeah. Okay. So we might see some changes in the slabs. It may not be perhaps one, but at least we may see some slabs going off, is what Mr. Mani sir is saying. I think that's fair. I think the more we have, lesser the slabs, the better it is. So like I said, Mr. Mani, that we also get questions from the participants. So I have one question for the participant. So before I read the question, may I request all participants to keep your questions short, because otherwise, we have to read out the whole question and it takes time. Anyway, he talks about the current scenario, okay, where we have deficit tax collection and not much of fiscal headroom available. And government has already borrowed 4.5 lakhs crore as additional money from RBI over and above the budgeted borrowing, as we all know. Where will money come from? How will, that is his first question. Second question asking, how will more money come for increasing expenditures? And the third question is asking, is the current measures announced by government are mainly on liquidity front? I mean, this is the theme that he's asking. So could you? Yeah, I mean, these are very good questions with which everybody in the government and the finance minister are grappling with. Because the key issue is it's a very genuine problem. I mean, where is the money going to come from? Yeah. Our sources of raising tax revenue are limited. So what do we, do? But linked to that, there is a larger question. And the larger question is, in times like these, which are unprecedented, do we really worry too much about the fiscal deficit and the impact it is going to have on that? So should we protect lives first, followed by livelihoods, followed by taxes? What should be the sequence? It can't obviously be that we focus on tax collections first to the detriment of everything else. And therefore, possibly the way out of this would be to see that at this stage, whatever tax reliefs, concessions are to be given, they are given. That leads to a stimulation of demand. That leads to a growth in the economy. And once the economy starts growing, we can go back and get all the tax collections that we want. In terms of the issue on liquidity that was mentioned, we have to bear in mind that it is liquidity which is essential in times like this, because we are in a situation at present where NBFCs and banks have been struggling for quite some time on account of various issues.
Yeah.
The larger issue has been in times like these, people may not want to spend. So there would be at any point of time, whether it is a corporate or whether it is an individual, to conserve cash and keep cash, because everyone believes in situations which are uncertain, cash is king. So if everyone starts believing cash is king, what is going to propel the economy? And that is where liquidity comes in. So I would say that at a broad level, the fact that we have seen a lot of measures to improve liquidity is a step in the right direction. If these can also be accompanied by many more measures to stimulate demand, I'm sure they are on the way, because we have the finance minister addressing us today as well. So I'm sure there are more measures underway, but all of these measures taken together could potentially result in the short term to a dip in the tax collection, which I would say is fine. We will live with that. But that dip in the tax collection could potentially set the stage for a much higher growth in GDP, which leads to a much higher growth in tax collection in future. That is what we should be looking for. So at this stage, I would say people should be looking at the larger picture and not get too much focused on what is happening in this month's collection or what is going to happen in the next quarter.
Absolutely, absolutely. I fully agree with you. I think these are tough times, and so in tough times, you need to have some. We cannot be so much worried about fiscal deficit because that will be there. And I think if we live as a nation together and we don't have too many losses, I think fiscal deficit can always be, over a period of time, can be brought under control. But I think these are different times, and like they say, tough times require tough measures. I think the government is coming out with that. So, Mani, from your talk, looks would I say that you support a demand for reduction in the GST now, since all businesses are impacted? Do you like broadly support that?
Can you just repeat that? I missed you for just 1 second.
So no problem, sir. So I'm, from the discussion that we had, and the question is, do you support a demand for reduction in the GST now that almost all businesses are impacted across the board? Would you say that?
I don't think there is a case for a broad level reduction of GST across the board, because the GST rates today are fairly reasonable. And when we look at something, we need to compare it with something else to know whether it's reasonable or not. So if we look at the rates that existed prior to GST, so if we look at the combination of the excise duty and the VAT rates that existed prior to introduction of GST in 2017, and you add up the excise duty and the VAT which existed then for any product and compare that with the GST rate in every single case is lower than the erstwhile rate. So there aren't any cases where the GST rate is higher than the earlier rates. Now, there could be certain pockets where the central government decides and the GST council decides that it is necessary to have a GST rate cut in order to propel demand. But that, as I said, is a function of the product, the consumption pattern in that particular sector, the overall supply chain dynamics of that sector. So it is something which has to be very cautiously calibrated, because if there is an across the board GST reduction on all products, that's not going to drive demand for all products.
Oh, is it? Okay. So you're saying that a reduction may not necessarily, increase your demand for those kind of goods. It's a good observation, Mani. So we talked a lot on GST, and I think one important question that I think most participants would like to ask you is on the income tax. So obviously the question is going to be, do you think the central government should look at reducing income tax for this financial year because of COVID?
I believe in the recent budget that we had, we have already seen a reduction of income tax.
Okay.
And we have seen a reduction of both personal income tax and we have seen a reduction of income tax, especially for manufacturing companies which are setting up. Now, basis the reductions that are there, the rates that we see in India today are very, very reasonable.
Yeah.
Now, we also have to bear in mind that when we talk of a reduction in income tax rates, in a country of 130 crores, we possibly have slightly over 1 crore people who pay income tax, and the remaining don't pay income tax. Due to whatever reason, I mean, they may be below the threshold limit, they may have agricultural income, there could be various reasons. But we don't have too many people paying income tax, and the people who pay income tax broadly seems to be people who are under certain slabs. In those slabs, the rates that we have are very reasonable. So people who earn an income up to 10 lakhs pay a very small amount of income tax now. So the potential for a lower reduction in income tax may be very, very limited, to my mind. But yes, there could be certain categories of the population. We have seen a lot of reductions being made for small business houses. Now, similarly, is there a separate segment that is carved out by the government, which requires to be treated differently for income tax purposes? That is something which I think we'll have to wait and watch.
Okay. Yeah, let's do that. So let's move on to tax reforms. Okay. So what areas should we focus in the immediate future for further tax reforms and assisting business in cash flow, because the times are such that every business is going through a cash flow constraint. So, my question to you is, what areas should we focus on in the immediate for tax reforms?
Okay, so when we look at tax reform to my mind is not only about what is referred to as the effective tax rate or the ETR, or what is the amount of tax a person pays. It's slightly broader because tax reform includes what we need to do in terms of the tax policy and the tax processes. One of the things that we have been seeing happening very, very well is the effort of the government to have a lot of online processes coming in, be it for income tax or be it for GST. GST from day zero, for instance, has been a completely web-enabled tax. So the tax return filing is electronic, the tax payments are electronic, and these processes mandatorily have to be done electronic. So there's no scope for doing a manual process at all for anybody, irrespective of the size of the business. So in terms of tax reforms, possibly what we should be seeing more and more in future is more and more electronic enablement, more and more digital processes and web-based processes. And let me give you an illustration. Over the last 2 months that we have seen most people being operating in a lockdown situation and work from home, what happens to the tax hearings which used to take place? Now, in the past, we used to have a situation where the hearing would take place in Mumbai. The counsel would fly down from Hyderabad, and there would be a person to support the hearing who would come down from Bangalore. These people would meet us in Mumbai, and we would then go to the tax commissioner's office to present ourselves for a hearing. Now the hearing is maybe a half an hour to 1 hour process. But to do that half an hour to 1 hour, you have all these people traveling, all these people discussing. More importantly, in Mumbai, all these people getting stuck in Mumbai traffic. Now, over the last 2 months, what we have seen happening is that the government has come out with very clear rules which says the hearings can take place online. And I'm expecting that subsequent to the lockdown being eased and subsequent to things becoming normal very soon, hopefully, we should have more and more of this, because in today's world, if the GST commissioner has a VC facility, if I have a VC facility in my office, if my senior counsel has a VC facility in Bangalore or Hyderabad, why do so many people need to travel? And here I'm not talking only of interstate travel or taking a flight. I'm saying even travel within Mumbai becomes very painful. So why do I need to do that as well? Why can't all of us be in our respective offices and why can't we do a hearing? Because it is a process where certain questions are being asked and certain questions are being answered.
Yeah.
It's very similar to what we are doing now. So you are located somewhere, I'm located somewhere, you're asking me questions, and we are comfortable having this conversation. So the reform that we will be seeing in future because of the present situation is more and more of enablement of digital processes on tax related matters. In addition, we are also going to see a lot of information coming to the tax authorities because they are also big time into data analytics now. So when people are filing their income tax returns and the GST returns and various other documents, it is possible now for them to correlate all the data that they have got and come out with a conclusion on whether the data which has been fed into 3 returns are similar or are there glaring anomalies. And if there are minor deficiencies, that can be possibly explained. But if they are vastly different, in that case, possibly there is a need for them to conduct an investigation. So we have been seeing a lot of effort which had started on this, may have got slowed down a bit because of the situation in the last 3-4 months. But going forward, we should expect the tax authorities to work in, I would say, a much smarter manner where they focus on web enablement, they do online hearings, they focus on data analytics, and we go and meet them only when it is absolutely essential.
Absolutely. I heard, Mani sir, that there is one reform that has come up is that, there is not, earlier we used to have one tax officer, always evaluating your returns. Now I believe that every year it could go anywhere in the country, and any tax officer may be evaluating. So it's just not known who is actually evaluating your tax reform. Is that true?
Absolutely. So that has already happened in income tax. At some point now in income tax, we had this problem earlier. And therefore, what the government has done is to make it nameless and faceless. Now this, to what extent this will help, we will have to wait and see. Because what we have to also bear in mind is, if there is somebody who knows the background in entirety, possibly that person could also add a lot of value. So when something becomes nameless, faceless, there is definitely an advantage, but there is also a small downside attached to it. And most companies will possibly balance between these two.
Okay. So before I take my next question, I have a participant's questions. What would you advise to advocate growth, boost in growth, create more employment, and higher GDP to stakeholders post-COVID? Suppose you were to advise the government.
Look, I would say that at a very broad level, the growth of an economy or the growth in the GDP of an economy is only, or the growth in consumption is only partially linked to tax. Tax is certainly not the driver of any of these measures.
Right.
Most of the growth, most of the consumption is a function of the various macroeconomic parameters which are there, which includes the liquidity. I would say to some extent includes the consumption pattern and consumption behavior. And there is a lot of behavioral economics which has to be considered in order to determine what stimulates growth and when do people go out and buy. That again is not a function only of the rate of tax associated with the products. Many of the taxes that we pay incidentally, all the indirect taxes, for instance, are bundled into the price of the product. So when we as consumers go and buy a product, we don't see the tax, it's invisible. And therefore, for us to have the ability to appreciate that the rate of tax for a particular product has gone down, and therefore we need to go and buy more, maybe to limited extent only. It could be for certain products, may not be for many other products.
Okay, true. So let me ask you a dream question, and I think many would be dreaming this. Can there be a time when there is no taxation in the payslip in the future?
I'm not aware of any country which has no taxes at all. And taxes seem to be, inherent. I'm just remembering someone who said long back that In life, there are just two things which are certain. One is death, other is taxes. Now, on a more serious note,
Yes.
what we have been seeing is actually the reverse behavior. We had seen a few countries which did not have taxes in the past. Even they have now started introducing taxes. The Middle East is one prime example, which for a very long period of time was tax-free. There were no direct taxes, there were no indirect taxes. So 2 years back, when the oil revenue started coming down, most of the Middle Eastern countries have started and they have introduced a VAT. A week back, what some of those countries have also done is they have increased the rate of VAT significantly. So we are possibly moving to a situation where we are going to have more taxes and not less taxes. We are also going to have taxes on situations that we have not seen before. So France, for instance, is now contemplating a digital tax. And they are not worried about whether other countries are going to follow suit or they are not going to follow suit. But they're very keen on introducing a digital tax. Now, over a period of time, therefore, we are going to see most countries looking at raising more taxes for their expenditure. And possibly, therefore, at least in our lifetime, we may not have a situation where we don't pay any taxes at all.
Okay. That's curious. Why would France be imposing digital tax? I mean, I can understand if it's a COVID tax, but why should a country be imposing tax, like saying a digital tax? Is there a rationale behind that?
The rationale is that they find a lot of people who are in touch and who have customers in France, but the company is located outside of France.
Okay.
And therefore, while there is an economic activity that is happening within that particular country, there is no tax that is accruing to that particular country. And that is the reason why they have started and they have decided to go ahead with a digital tax. Many other countries have already, done that. We are also on this thinking in the same lines. And therefore, at some point of time, we will possibly have more of tax and not less of tax. I also have a very selfish motive in saying this because if there is no tax, I won't have a job. So on a very personal and selfish reason also, I wish there would be more and more taxes.
Okay, that's a new thought. So thank you, Mani. Today we didn't take an open question, but I want to tell everyone that we want to wind up about 5 minutes earlier because, as you know, at 4 o'clock there is a finance minister's speech on further boost to the economy, and I'm sure a gentleman like Mani would definitely wanting to hear more about it because that's his field, his area of interest. So if there is anyone who wants to ask a question on the open question, can you please raise your hand and so that the back office can enable you to ask the question directly to Mani. Back office, anybody?
No.
Okay. So, if you, we talked about, if the top of the mind, what, before I wind up, what are the, quick summary points you would say if, because we are in tough times. So what are the quick reform points that, that you would want to take it up with the government?
I would just say that tax as a whole is essentially a product of many other things. And if therefore those things are taken care of, the tax revenues will flow automatically. What seems to be very, very important right now is to focus on livelihoods, focus on employment, focus on having some kind of consumption which starts. And if those basic factors are taken care of, the tax revenues will follow. Now, it is quite possible that there will be a bit of a time lag. It may not be correlatable month on month, but that is fine and that is okay. Because if we focus overall on ensuring that we get the economy back on rails as quickly as possible, all the other factors which are necessary to get the economy back on rails are attended to. Over a period of time, when this comes back on rails, everything else will gradually fall in place because it's a process. and one follows the other. It's like a supply chain. So if one part of the supply chain is broken, you can't have forward linkages or backward linkages. Similarly, if the economy as a whole is under lockdown or some parts of the economy are not working, in that case, all the linkages to tax get broken down. And that is why I believe the focus right now should rightfully be on providing livelihoods, ensuring employment, ensuring issues to do with the larger population are attended to, and get the economy going, get things going gradually, and put things back on track.
Excellent, Mani. Thank you very much. I have one more last question before I let you go. It says that our percentage of direct tax is as poor as 6% of a population of 120 or 130 crores. What is needed to increase the taxpayer base?
There are various measures that the government has already taken, and comparison of the total population of the country with the income tax, payer base may not be rightfully correct, because very large number of people would be below the tax threshold. And even in terms of the various welfare schemes of the government, so if we take MN Narega, for instance, the maximum wages stipulated under that fall below the income tax threshold exemption limit. And therefore, at some point of time, there would be rightfully a lot of people who are not required to get into the tax. There would also be some set of people who possibly can get into the taxpayer base. The government has been working on various initiatives, such as having more criteria to decide who are the people who are required to apply for a PAN, the criteria of people who are required to file an income tax return. They have also been looking at backward linkages to collect the data that they have to say who are the people who are liable to pay a tax, who are not paying a tax. And all of this over a period of time has been leading to an increase in the taxpayer base, but possibly it is not to the extent that it should be.
Right. Okay. Thank you, Mani. And I think we should wind up now, because just about 3 minutes are left for the 4 o'clock session with the finance minister. Mani, I just want to thank you once again. I think the talk was excellent. It was thought-provoking, and some of the ideas and thoughts that you have put forth are really something that we should look forward to debate about, talk about it. I would like to invite you once again at some point of time in our COVID series, because I think there is still a lot that we can talk about and learn from you. So once again, Mani, thank you very, very much.
Thank you very much. Thanks for having me on your show. Thank you.
Thank you.